I recently asked ChatGPT for a trading plan that would quickly turn $100 into $10,000. It also gave me some advice, such as concentrating on highly volatile assets and doing technical analysis. Disciplines must be observed. That is something we are all aware of. Nothing particularly particular. So I decided to ask a more precise question. I went ahead and told it to generate the best strategy possible utilizing an AI-based TradingView indicator code that the computer had learned. This indication is currently extremely popular. I also stated that the strategy's goal is to turn $100 into $10,000 in the quickest amount of time possible. It supplied me with a comprehensive strategy. It wasn't quite right, so I had to make a few changes here and there, and here it is. In the final setting, I will test the technique 100 times using the price of Ethereum on a 3-minute time frame to see if it works. But first, let's open the charts and start adding indicators. As a result, the method incorporates 3 free TradingView tools. As we add each indication, I will explain how it works. So, let's add the machine learning KNN-based method to the first indicator, and let's thank the creator Capissimo for this fantastic indicator. The machine learning method works by studying previous market data and forecasting future price movements motions based on patterns in the data. KNN is a classification algorithm that determines the class of a data point in a feature space based on its nearest neighbors. In the context of trading, KNN can be used to predict whether a stock's price will rise or fall based on past data. To utilize KNN for trading, first collect historical price data and translate it into a feature vector. Technical indicators such as moving averages, the relative strength index, and momentum indicators can be included in the feature vector. The KNN algorithm is then applied to the feature vectors to predict whether the stock price will rise or fall. This indicator does not repaint. Nonetheless, you must wait for the candle bar to close before considering a signal valid. It's also incredibly easy to read. The indicator essentially produces blue and pink labels that represent buy and sell indications. Labels can have varying degrees of opacity depending on the strength of the signals. We cannot utilize this indicator alone because it will generate a large number of 4-way signals. That is why we need to add the next indicator, which Dominic Ossoletti calls the EMA ribbon, a trading indication that consists of numerous exponential moving averages plotted on a price chart as the exponential moving average ribbon. This tool is designed to determine the direction and strength of a market trend. Plotting numerous EMAs with different time periods results in the EMA ribbon. The moving averages are then placed on top of each other on the chart, creating a ribbon-like look. When the ribbon slopes upward, it suggests that the market is in an uptrend. When it slopes downward, it shows that the market is in a decline. The EMA ribbon will assist us in identifying potential buy or sell signals depending on the trend direction and price location relative to the moving averages. This EMA ribbon indicator, as we can see, includes buy and sell signals. Let's disable the EMA ribbon signals because we already have a buy and sell indicator on the chart, which is the machine learning indicator. Looking at the chart, we can see that while this indicator does filter out a lot of false signals, there are still some that remain. As a result, using ChatGPT is recommended, with their relative strength index serving as secondary validation. The RSI, as you are surely aware, is used in trading to assess the strength of a security's price activity. It is shown as a line on a graph with a scale of 0 to 100. When the RSI exceeds 70, it is regarded overbought, and when it falls below 30, it is deemed oversold. We will make the RSI more sensitive as part of our plan. This way, we'll obtain more legitimate trade entries. So, open the indicator style and set the RSI upper band to 60 and the RSI lower band to 40. Let us now look at the entry conditions for a long trade. The following requirements must be met. First, the price must close above the 200-day moving average. The ribbon should also be above 200 EMA. Furthermore, it must be green. Second, the price must return to the ribbon without falling below the long-term moving average. After that, the machine learning technique must print a blue label. Finally, the RSI must be visible before the buy signal. You can open a long trade as soon as these conditions are met. Set the stop loss to be lower than the most recent swing low. Target twice as much risk. Once you've made a fourth of your profit, or merely the stop loss to the break-even point, you're done. As an example, you might risk 5% of your account on each trade in order to make 10%. The price rises in your favor, and the unrealized profit is 2.5% or 1/4 of your aim. When this occurs, adjust the stop loss and close the trade. Here's one more example to make sure you grasp the strategy completely. We can observe that the price is clearly rising. The RSI got overbought, indicating that we can buy the security at a lower price. The machine learning system then generated a buy label. We follow the rules and carry out the transaction. For short trades, do the opposite. First, wait for the price and the ribbon to go below the 200-day moving average. The ribbon must turn red, and the price must return to the ribbon without exceeding the 200 EMA. During the retreat, the RSI must become overbought, then wait for machine learning to provide final confirmation. I almost forgot to include this. Do not initiate the trade if the RSI becomes oversold at the same time as the sell signal is generated. Only open a short transaction if all of the rules are in place. Set the stop loss above the most recent swing high and target 2 times the risk. If a quarter of the profit is realized, raise the stop loss to the break-even point. Now that we've established the ground rules, let's look at the backtesting findings. So the technique started with a $100 account balance and boosted it to $19,527 after 100 trades. I find it amusing that the strategy's 1 ratio isn't even the highest of all the methods I've tested so far, but the truth is that this technique is a little risky. You've probably noticed that the risk per trade has been increased from 2% to 5%. It goes without saying that such risk entails greater drawdowns. However, it also provides a greater return. By no means am I suggesting that you risk 5% of your account per trade, especially if you have a larger account. But if your goal is to quickly grow a small account, this risk per trade may be appropriate, so give it a shot. But don't skip the forward testing phase on a paper account. I cannot emphasize how critical it is. Anyway, thanks for taking the time to watch this video. I hope you liked it. If you want to see more crypto strategies, please leave a comment below.